Hello, and welcome back to the Vancouver Life Real Estate podcast and YouTube channel. This episode we are extremely excited about because we have Patrick Francey joining us. And so this episode is largely for the investors out there, for the would-be investors, and for those curious about what a 4-decade vet in the industry has to say about the current and future landscape of the real estate market in Canada. So Patrick is the CEO of the Real Estate Investment Network, whose community nationwide have accumulated over $5.4 billion in real estate. He is a Canadian real estate investor, a business owner, an educator, and a coach. Just to go over a little bit of his bio here, Patrick is also considered a luminary in real estate investment education, entrepreneurship, and personal and professional development. A gifted speaker, as you're about to find out, and a coach dedicated to enriching lives through personal and professional growth. As the CEO of the Real Estate Investment Network, or REIN, and a multi-business owner, Patrick brings over 40 years of expertise guiding individuals towards their financial and business goals. His enduring impact in entrepreneurship and real estate investment is an unwavering beacon of guidance, proving his principles invaluable for those seeking to be their greatest self and live their best life by design. To put it simply, Patrick is an icon in the real estate investing world and loves to share his immense knowledge and success with those around him. Patrick, thank you so much for being here today.
Oh, thanks for having me on the show.
Our pleasure. So let's get right into the questions here. As the CEO of REIN and an investor for over 40 years, you have incredible insight into the patterns and trends of real estate investors. Now, the last 2 years have seen some of the most dramatic changes in the real estate landscape, especially with the higher interest rates, more taxes, foreign buyer ban, crackdown on short-term rentals, just to name a few of the headwinds. To some, it can almost feel like an all-out war against rental housing providers. What is your take on how the landscape has changed over the recent years?
Well, I think there's some fundamentals that we have to consider is that I don't know that it's changed all that much in many ways. I mean, certainly with what's gone over the past couple of years, we see a lot of shifts because of what's happening global macro. But I think it's really helpful just to take a step back as real estate investors, or for anybody who's interested in real estate, and to start to understand that as investors, we have to do our best to take the emotion out of the decisions that we make. Right now, we're living in a very emotional time. We see what's happening politically. We see what's happening, again, global macro. We're finding more and more that we're very divisive as a society. And without going down those rabbit holes, we see the division. The point is that we look at the controversy around immigration. We look at the controversy around the lack of housing and the words like crisis. And these are things that drive emotion. And so I find that over this many years is how can I get grounded in the data, knowing what drives real estate. So take the emotion out of it. And real estate's a very emotional topic, as you know. And, it's also driven by a lot of sentiment. So when we start to see the emotionality, the headlines, the politics, the divisiveness, all of the surrounding factors, it really adds a lot of confusion to this. So again, it's a little bit a long-winded answer, but just to give it context, when we look at real estate, number one, are we looking at it as a first-time or next-time home buyer, or are we looking at it as a real estate investor? What happens is investors get caught up in the emotion of a first-time home buyer. Mm-hmm. I can't afford this. Interest rates are too high. Those darn investors are buying real estate, and they're driving affordability out. So these are all things that we have to consider. So a big topic, and like I say, I know that opening might be a little bit vague, but we have to step back from it and say, okay, well, what do we need to look at when we're investing in real estate?
Yeah, agreed. It's interesting. It's so many people that you'll approach about buying a property, whether it is a primary residence or an investment, and they're like, well, it's such uncertain times right now. Mm-hmm. I'm like, okay, well, let's think back. And when was the last year that things were not uncertain? When was there, 100% guarantees in the future? So, I mean, that level of uncertainty, you're absolutely right, Patrick. I mean, there's always something, and maybe there's different levels of it, but ultimately we're always in uncertain times.
Well, we are, and where we wrap certainty around it is, number one, get step back from the emotion. A lot of what you hear from first-time home buyers or even next-time home buyers is, I was talking to my dad, or I was talking to the guy I work with, or I was talking to my uncle or my aunt, or somebody had an opinion of what's going on in the market.
It's a prices for us.
Yes. Prices are going down. It's a bubble. We're going to crash and burn. It's going to explode. And, interest rates are going to go to the moon. And we see and hear all of these things. So how do we do that? Well, first off, we start to understand what drives real estate. And, within the real estate investment network for 30 plus years, we've shared what we call the long-term real estate success formula, which is that real estate is driven by the economic fundamentals of any region. And I'm being specific in the term region. We often hear about Canadian real estate and the average Canadian price and average Canadian rents. Well, there's just no average Canadian really anything. That's like saying, what's the average temperature in Canada? Well, okay, where? What city? Where are you? Mm-hmm. So real estate's very much the same way. So, we focus on that data that takes the emotion out of it. Where is GDP growth? Where is population growth? Where is the unemployment rate? How are we sitting? What is where's the population growth coming from? Is it interprovincial migration? Is it immigration? And so right now we're in the thick of those conversations, aren't we? We look at what's happening immigration, million permanent, then there's non-permanent residents. We're 1.3, 1.5, whatever the numbers really are. That all has an impact. And then we got refugees coming in, so there's so much happening economically. It can really create that uncertainty, but we have to stay grounded in one thing. And that is, as investors, and I'm speaking from an investor perspective in this particular case, is that so first off, we treat our real estate investing like a business. I use that term. We use that term all of the time. And well, what does that mean? So I'll give you an example of that. So if you had a hot dog stand, you're in business, okay, and you want to sell hot dogs. Now, where's the best place to sell hot dogs? Are you going to open your door on a residential street and then hope somebody walks by? Or are you going to look for a football game, a baseball game, or something where you see a steady stream of people coming by your hot dog stand? Well, that's exactly what you're going to do. So hot dogs work when, a hot dog stand works when you have a lot of people coming that are hungry, mm-hmm. and they're fired up and they want something to eat. They want a good hot dog. Well, when we look at that from a perspective of real estate, there's lots of conversations about the price of real estate. But if I have a business and I have a lineup of clients, I'm pretty excited about that business. If I know without question that I'm actually going to have clients, then I'm very interested in that business. Well, if I'm a real estate investor, can I rest assured on right now for the foreseeable future is I'm going to have clients lining up to rent my property. Mm-hmm. So if I'm looking at it pragmatically, and I'm looking at it from a perspective of, well, here's this market. I know lots of people are moving into that city. I know that they're got jobs. I know they're going to continue to work. I can be a rental housing provider. I can own that business called that little piece of real estate. Now, the challenge that we face is that many people don't treat it like a business. They think, oh, I'm an investor. Most are speculators. If you're not looking at the data, if you're just talking to your uncle or your brother-in-law or whoever might be telling you to buy real estate, that is really speculation. If you treat it like a business, what are you doing? You're doing, okay, who's my client? Who's my end user? Does it cash flow? What's my insurance costs? What's my property taxes? What are the real costs against it? So when we break things down, take the emotion out of it, make data-driven decisions, invest and treat it like investing in a business, it changes the scope and really how you look at real estate overall.
And probably how you feel about it too.
Well, number one, your confidence goes through the roof, mm-hmm. because you're going, holy cow, look at the demand. Oh, there is no supply. Unemployment is strong. Let's say it's at even 5.5% or 6%, which, by the way, we can talk about that later. That's going to be the new headlines when we crest 6 or 6.5% of unemployment, which I think is where we're going to end up, which is fine. The point is that when I start looking at all the data, I'm going, wow, if I can buy this property, I can rent it, have some positive cash flow, knowing that rates will eventually start to come down.
Yeah.
The cash flow will improve. The demand will give me the opportunity to increase my rental rate. And this then turns out to be a really great little business as long as I maintain it, look after my client, call my tenant.
Stay on top of it.
Stay on top of it. And by the way, screen my tenants very, very well.
Very important.
Especially if you're in Ontario or British Columbia, where you in fact have some regulations that say you have to do that.
Yeah, and that benefit the tenant, arguably.
Yes.
You know, it's interesting. You brought up a couple of interesting points there. You touched on speculators and you touched on investors. Mm-hmm. And I feel like the general public or those that would be initial investors get branded as the same thing. Mm-hmm. And I think that they're significantly different. And maybe this is a good segue too to talk a little bit about what an investment philosophy would look like too. A general one, speaking to real estate. So maybe if you could touch on how you see the difference between a speculator and a would-be investor, and maybe the philosophical approach that accompanies one versus the other.
Well, I think there's, we hear a lot about and complaining about investors, and really it's not about investors. It is about speculators. And why? Why do we hear about that so much? Why? Because usually it's the speculators that are in the headlines. They're the headlines that are written about those that can't close on a deal because they bought a pre-built that they never intended to get a mortgage on and or ever take over. They were signing it. They were buying it strictly to say, I'm going to assign this deal because, real estate goes up. Somebody else is going to want it. And so when we live in the world of speculation, it's what's the intention that you're buying that piece of real estate for? Mm-hmm. Now, when you look at the pre-construction world, and that's where a lot of speculation lives. That's where the majority of it lives.
Yeah.
And what happens? They're going in, they can get in light, they can not have to worry about too much, they can get some money into it. Let's say they've got 100, 200,000 into it by year 4, but year 4 is the year the music stops. Mm-hmm. Year 4 is the year that interest rates go up too far. Yeah. But if your only exit plan is to assign that property to somebody else, that's totally speculation. I would not hesitate in calling it gambling.
Yes.
And sadly, investors get painted with that brush because that's what hits the headlines.
Yeah.
They're not equipped, even when they take it over, they're not equipped to say, well, how do I look after my tenants? How do I make sure that the property is set up to accommodate the tenant profile that I have? How do I even attract them? So it gets really messy in that because they were never intending to do that.
Yeah. Right. And then they get the wrong person in there too.
Then they get the wrong person, and then you're hearing what's the next headline?
Yeah.
Mm-hmm. They can't get them out, and they're not paying rent, and they're squatting, and they hear all of the horror stories. And as you both know, and I've learned over the years, is that when you're an investor and you're treating your real estate investing like a business, we start first off saying, well, what is it we're trying to achieve here? Our job as a real estate investor is to make our money work harder for us than we work for our money.
Correct.
Now, there's all sorts of tactics. There's all sorts of strategies. We can talk about fix and flip, and you can talk about Airbnb, and you can talk about buy and hold, which for me is the primary base foundation of investing in real estate. Now, when you start to look at that from an investment model, you look at the data and you say, okay, well, economically, what's going on in any given city and any province? Start with the province, then go to the city, then actually look at the neighborhood and saying, okay, based on what I'm seeing here, I see future growth. I see demand for rental going up. I see the appreciation of a piece of real estate going because that demand is increasing, and we break that all down. I'm making sure that I have cash flow. I'm treating it like a business. So what am I doing? I'm maintaining it. I'm marketing it. I'm being very clear on who my client and my demographic is. So it's all very pragmatic. It's very thoughtful. Mm-hmm. Yeah. It isn't, I'm going to buy this because my brother-in-law said, let's buy this and sell it in 4 years. We'll make $1 million.
Mm-hmm. It's more of a plan to get somewhere.
It's a plan.
Right.
It's intentional.
Right.
Yeah. And that's the fundamental difference that we run into. And again, sadly, in the general public's view, and even the stories of people not wanting to invest in real estate because they hear all these horror stories and it frightens them off. And that's just based on the reality that there's so much, and especially over the past, let's say 3 to 5 years, so much speculation.
And I think that that's painted investors into a bad corner, because when you look at the policies, the political policies, for example, around things like Airbnb or things like making secondary property investments, it really seems like it's public policy against the investor, when really I think it's more public policy against that speculator. That's and unfortunately, because investors, I think the general public often misses the fact that investors are an essential part of providing housing for renters. So as much as you don't maybe like it, or it's been misbranded, investors are a crucial piece of this pie.
You know, you're hit it right on the head. And this is where the challenges around governments, you know, you got federal, provincial, municipal governments, and the squeaky wheel always gets the grease. So in other words, you know, it's always politics over policy. And I'll be careful saying not always. It seems like always.
It does. It seems like it.
And ultimately, what have you got? You've got a number of squeaky wheels called the general public, who has an opinion, which is based on a very, a very limited insight or education into what's really going on in housing. So they complain about it. You know, it's where NIMBYism all stemmed from. It's where, you know, the comments that, well, it's those darn investors, you know, there would be way more real estate if it wasn't for the investors. Well,
that's actually not true.
That's actually not true. You know? And so these are the things that as investors we have to, you know, there's a part of it where we have to put blinders on and not buy into it. When we're looking at investing in real estate, you know, we're considering a couple things. You know, this is where mistakes get made, is why are you investing? Well, are you investing for income today, or are you investing for income in the future? There's rarely a combination of both, not that there isn't, but historically speaking, if you've got a lot of cash flow in the first 2, 3, 5 years of your real estate, keep it in the bank, you're going to need it, because ultimately there's maintenance and things go wrong and all the stuff that happens, which is the normal course of business, full stop. And so when we look at, you know, as investors and what we're trying to do, we have to determine what is the outcome we're looking for, what's the political environment, you know, without going down on a rabbit hole just yet. I look at what's going on in Calgary and I look at what's going on in Edmonton. Now, I was born and raised in Edmonton. I'm very clear and understand Alberta intimately because that was my home. And I still have businesses in Edmonton specifically. So I look at that environment. But here's the thing about it. People are saying to me, well, so Patrick, are you investing in Edmonton? And I've got lots of real estate in Edmonton that I've accumulated over the past 20 plus years. And I'm going, no, I'm a little bit gun shy right now about Edmonton. And they're going, yeah, but it always follows Calgary. I go, I get it, but I don't know if it's going to follow Calgary, because here's my concern. And it's politically charged for me, because that city has put in an NDP government. Now, whatever you think of that NDP government, I'm making my own decisions. I have a thesis around how that particular political body, that I guess philosophy, how it can affect and impact a city. And I'm going, it makes me nervous. So therefore, my thesis is, I'm not confident in that market. Therefore, for me, unless the deal's really good, I'm not investing in Edmonton right now. That's not to say don't invest in Edmonton, but you go in with clarity, knowing what the environment is
and your risk sides.
And here's the thing about politics. Here's the thing about politics. It's the thing about interest rates, for example. It's the thing called COVID. Those are influencers. They're not long-term economic fundamentals.
Catalysts.
Interest rates will come up, they'll come down, they'll impact it. COVID, guess what? It had a huge impact, but it was just an influencer. Now the dust is starting to settle on that. Yes, there is consequences. Yes, there's a ripple effect. And politics is the same thing. You know, one political party's in there right now in Edmonton, in this example. They're in for the next 4 years. I'm going, nah, I'm going to sit back and just see what some of the policies are that they implement. And then I'll start to make my decision about what I want to do in Edmonton.
Fascinating. It's very obviously like logical way of looking at how you invest in real estate. And it's fascinating even in like the resale world for your end user. how often sentiment drives decisions based on like, okay, the market's rising, so I feel comfortable buying a new home because in 3 to 6 months it'll be worth more. Very few people seem to think even a year out, 5 years out, about what their property will be doing and of course what the economic climate is.
And they haven't removed enough emotion.
Yeah, fair. Now, you had mentioned immigration and of course politics, and right now it seems the policy is to just kind of have the floodgates open. And we're seeing the ramifications of that now, right? Infrastructure is pushed to the limit. We've got our all-time high rental rates. We've seen what it did to property prices. We know what's going on at hospitals and schools. Is this something that, again, it's just an influencer and you look beyond it, or are there further ramifications or opportunities from the eyes of an investor?
Well, I think there's a couple things that you have to consider. You know, immigration is a big part of what's going on right now. And there's a couple things around the immigration. To your point, they can throttle the immigration back 50% and it's still we still don't have the housing to meet the demand.
No.
And so whether they throttle back 50% or not, it doesn't look like they're going to, but who knows? We still are going to have a housing shortage. Now, then you go beyond that and you say, well, what if they just shut it right down, which would be an extreme, but let's just use that as an example. Then we have to say, well, okay, we've got an existing challenge with just the people that are in this country right now. So there's a lag time. In other words, that churn of people is going to start to want to buy a home. Some are going to leave. Some are going to lose their jobs. So there's a churn that happens in that. But again, the demand is, until we start getting housing supply caught up with this existing demand, let alone the ongoing increased demand, we're going to start to see upward pressure and on prices, on real estate prices, as well as rents. And that's, as an investor, that's one of the things that we have to really consider is, you know, where are rents going to go? Where's the rental demand going to be? And that rental demand is not going away anytime soon.
Yeah.
That's going to continue. So will we hit a ceiling of limitation around rent? Yes. And then it'll bump up again. It'll be, you know, it's never straight up. And in some regions, we've seen a pullback and all of the things. That's a normal, you know, shift in cycle of any given region.
Fair enough. So then, okay, if we're going to talk about density, maybe we open up the discussion here about what David Eby is trying to do here with the rezoning. Okay, we've got our provincial legislation that's being pushed down, and it looks like every single family home will be rezoned to have 4 to 6, 7, 8 units on it potentially. Is that going to dramatically change our landscape, or are some of the costs just so prohibitive that it's just going to be more almost lip service?
I would also say, and the process, because the process of building a home too. I mean, sure, you can rezone every single family lot in the province to, you know, every single family or duplex zone lot, but not everybody has the wherewithal or the risk tolerance or the cash to turn that into additional housing. So I think that there's a huge barrier there as well, but I'll let you answer.
Well, I don't think there's much to add to what you just said. I agree 100%. I think there's a huge lag from making and drawing that line in the sand, saying, okay, you have to do this by whatever. And so we draw that line in the sand. And to your point, developers got some challenges. Number one, interest rates are still where interest rates are. Yeah. Then you have to have the labor force and available and want to work to do that. And then there's just the process of building and developing. And there's not a lot of people. It may seem like it sometimes, but there's not a lot of individuals who are willing and have the capabilities to do it, the skills to do it, the business model to do it, the capital to do it, and the labor to pull it off, and then do a good job. This is where you'll start to hear the stories of the lack of quality of buildings as they go up. That will definitely, you'll start to hear those stories as the gates start to open up.
It's funny. Some of my clients are tradesmen and plumbers and carpenters, and you know, when we talk about the housing needs that came out with the report from CMHC, it was something like 4 million houses by 2030, and they said, you know, not only is that impossible, but two, if we got anywhere near that number, the quality that would exist inside these homes, the insurance problems that would take place would become so unaffordable, we would have a whole slew of different problems, even if we just went down this path. So it seems like to me, how do we fix this housing supply issue? Because it started 30 years ago and we kept kicking this can further and further down the road. Is that also at the same time an opportunity for investors too? Because it seems like when you're a good investor, to some degree, you have to have a bit of an amoral perspective on marketplaces if you're removing your emotion from it. Mm-hmm. Because there's going to be upside that's at the detriment of others, or there's going to be policies that maybe don't make sense now and you'll go later, which again will hold back units for people that need them now. So how do we solve this housing crisis? I know you don't have to have the answer to that. It's a huge question. Yeah. But I'd just love to hear your thoughts on whether or not you think the current legislation and the path we're going down is the right approach, because Dan and I have often talked about on our podcast, on a weekly podcast, a lot of what we're seeing right now are knee-jerk reactions to the loudest squeaky voices that are taking place. And like we just talked about with the multiplex plan, it's a great idea, but when you feasibly look at its practicality, it may not be there.
Well, and I would think that it's, I don't see it as feasible. I'm not saying it's impossible, but it's going to be a very slow go, whatever it is. How do you fix the housing problem? Number one, I don't think there is a fix to it given what's going on. Yeah. I think they're going to continue to put these policies in place. And what does it do? It greases the squeaky wheel, the loudest voices. It does all of that. So as investors, and this is something to your point, is I develop a thesis. Okay, so I'm saying, okay, when I know, and I believe that one of the best ways to put my capital to work is to invest in real estate. So I have to look through the sentiment. I have to look through the fray. I have to get to the data, and then I create a thesis. Okay, so we've got all these housing policies. Everybody's talking about fixing it, and you've got different political parties with different views on how to fix it. It's bureaucracy. Mm. And we know just based on that, this is not going to happen. Yeah. And so as an investor, I'm going, they're not going to fix this problem anytime soon.
Yeah. Yeah.
So am I worried about it? Nope.
Yeah.
Kick it to the curb, that thought process, and just go about my business of investing in real estate, of building an asset of real estate based on a fundamental that I'm going to buy a great property in a great location. I'm going to buy the piece of real estate knowing who my end user is so that I'm catering to that particular demographic. Yeah. I'm going to do my research on saying, okay, there's demand in that area. I'm going to look at things like walkability. I'm going to look at what is the economy of that particular city doing? How is that neighborhood attracting people? Is it attracting my particular demographic? So again, I'm taking the emotion out of it. I'm just being methodical and pragmatic, and I'm going, okay, I can now leverage my money. I could either, get 20% down or 25% down, and that property will cash flow. Mm-hmm. And maybe I'm going to put 30% down, whatever the situation is. But my thesis is they're not going to fix the housing problem, as in we're not going to be inundated with supply.
Yes. I've made this comment numerous times on our podcast, how in many ways, the reason that we went through a huge interest rate hike was to slow down economic activity. And in many ways, it's designed to allow supply to recover so that prices can recover. But housing is such a 5, 10, 15-year process to even have a dent on some of this. And then it gets so complicated when you magnify it by immigration and other interprovincial migration, things that we're seeing compounded by affordability. It's just not a problem that I think, like you said, that we can actually fix, at least temporarily.
Well, guys, this is such a huge topic. Mm-hmm. It's a very, very big topic.
Yeah. For decades.
And there's so many things that, even in what you just said. So when we look at Canada, and we'll call it even Canada, US, mm-hmm. What's happened over the years is that anything that we would call productivity, we farmed out.
Yeah.
We moved it offshore. Yeah, that's all starting to seemingly shift right now. And we don't need to go down that path. But let's understand one fundamental thing. Canada as a country is primarily consumer debt driven. So in other words, as long as people are buying things, the economy seems quite good. Mm-hmm. Real estate is one of those things.
It's a big one.
So it makes up a really big part of our economy. And we think about the house itself, and think about when you buy. You guys know this better than anybody. Think about the amount of jobs that just the sale of a house supports. From you as realtors, to your team, to the legal team, the lawyer and his team, the mortgage broker and their team, the bank and their team. So just think of that's just that.
Yeah.
Okay. We didn't even consider the house got built.
Yeah.
Okay.
Yeah.
And that, the city municipality and the jobs that supported and the bureaucracy that drives that bus. And so when we start to look at housing is in terms of an economic engine of a country, it's a big one here for Canada.
Wow. That's a really good point.
Right? So what are we seeing? As interest rates have gone up, they're trying to slow things down. The narrative is that we're trying to bring inflation back. I could go on forever about that, but the point is that inflation's not coming down. Inflation has slowed down. So it's slowed down recently to 3.4%. Okay, that 3.4% is on top of 8% and 6% and 5% and all the rest of it. So it's not cheaper. It's just slowing down, which is...
It's a large misconception that you're pointing out.
Yeah. And so they're going, well, it should only be 2%. Okay, well, says who?
Yeah.
Okay, so let's just think about 2%. 2% over 10 years is over 20%.
That's right.
Okay, well, did you make 20% more? Not many did.
Yeah.
When you look at the general population, as business owners or self-employed individuals, we work a little harder, we get a little bit more creative in our sales ways and all the things that we do, so we probably have the most opportunity. But ultimately, somebody who's working for a wage, did they gain 20% over 10 years?
Not a chance.
Let's just say they did.
Yeah.
Okay, well, now they're keeping up.
Yeah.
Status quo.
They're not getting ahead, right?
Yeah.
You're swimming hard. It's like the duck on the surface, right? And then the feet are like really paddling hard.
Swimming upstream.
Yeah. And so when we look at what's happening, and you have to, without going off on too many tangents, you really do have to look at monetary system and the policy. And did we really see an escalation in prices, or did we just see a devaluation of our dollar? Again, that gets more complex and deeper into the weeds. But when you look at it, we just realize there's so much money that flooded into the market that it devalued our currency, which it did on a global scale, by the way. So it's an interesting, it's a fascinating time. I think that people are caught in the emotion, hence the sentiment.
They also want someone to blame.
And you're making a great point. Everybody wants somebody to blame. And the fall guys, mostly, it seems, in the housing market is those bad investors and those dirty landlords. And it's our fault that, somebody's renting out, cordoned off with blanket rooms for, $600 a month. And I don't even know what to say about that. When you look at it on the headlines, you go, it's a little cheesy. Are you taking advantage of a situation? I'm sure some people are. But if you're a student and you literally can't find a place to live, these international students and the universities are finally somebody shining a light on their,
participation in it.
It's like, come on over. And pay 4 times what anybody else would.
That's right.
So there's a lot of things that are in play here, and everybody's looking for the thing, and there just isn't a thing. There's a lot of moving parts, and it's hard to even wrap your mind around it. I spend a lot of time in research, but it's hard to wrap your mind around all of the nuances that show up as a vibration, and then the next thing you know, they turn into a wobble.
Yeah. I've got a really interesting follow-up just to that, because this question kind of fits nicely into what we were just talking about. Dan and I talk a lot on our show about CPI, inflation, interest rates, population increase, effectively the macroeconomic environments and factors that have implications to both investors and homeowners. But how closely do you value, say, the macroeconomic trends versus the microeconomic trends that are taking place in maybe the areas that you want to invest in? Do you consider both equally, or do you look at them as a asymmetrical relationship?
Well, I think there's if you give me an example of micro, what you call micro, and then I make sure I want to answer your question.
Yeah, so I'm looking at, I'm watching the central bank, and I'm looking at the overnight rates, and I'm deciding, should I buy a place here in Vancouver,
Mm-hmm.
right? Should I buy an investment property, or should I wait for rates to drop and then I'll buy,
Mm-hmm.
right? Without looking at maybe the micro pressures such as geography, the inflow of people, the job situation that's here locally. Mm-hmm. And then looking at the macro perspective and saying, well, according to the Bank of Canada, if rates go down 0.5% here, then I'll jump in.
Yeah. Okay, so that's a good question. I think that to our earlier point when when I pointed out, so when we look at regionality, there's a couple things that we have to consider. Let me jump to Calgary for a moment. So in Calgary right now, the market's hot. Everybody's talking about Calgary. I mean, we started talking about Calgary literally 5 years ago. This was so easy to see what was happening. Like, to look into the future of Calgary and to start to see what they're experiencing today, I mean, it was very, very clear. Yeah. Now, always some risk in behind all that. Now, when you look at Calgary, everybody goes, okay, well, let's invest in Calgary. Now, here's one of the things that's happening. And you talk about micro. Okay, one of the things that's happening in Calgary right now is there are some condominium projects going on. There's a lot of Ontario money, not as much British Columbia because it's closer and they know more about that. But there's a lot of Ontario capital going into the Calgary market. What are they buying? They're buying pre-sale, and they're buying condo. Lots of that, right? Here's a fundamental difference. Condos are a dime a dozen for a reason.
Yes.
Number one, there's some cultural things in Alberta, and although that's shifting because of immigration and it's not what it used to be, understood. But condos are, if you want to live in one, great. I would not invest in a condo in Calgary or Edmonton. I say that very, very blatantly. I have my own views of it, and I have lots of reasons to not do that. Having said that, back to the micro, there are specific neighborhoods in Calgary where that in fact makes sense. Where you hear about speculation is you've got Calgary capital moving in. They're looking at 7, 8, 900,000 for a condo, and they look at what's going on in Calgary. They go, "Oh, I'll take 3." Thinking that it's the same market.
Right. Yes.
And it's just not. It's not the same market. It's not the same demographic. It's not the same client base that's going there. So
excuse me.
Micro is incredibly important when you finally make a decision. If I'm going to make a decision to invest in Surrey or Port Coquitlam or downtown Vancouver, I want to make sure that I understand why that particular neighborhood, why that particular city, but specifically what's going on there.
Yeah. I've got something in my throat.
Yeah, no worries. So your comment about how many people essentially have a part or a role in one home that's being built, from the original developer, let's say, that says, okay, I'm going to build a house here, to the people they hire, to the people of the city, all the way down to the realtor, lawyers, etc. I mean, it's got to be 50 people touch one home in that sense. And where I'm going with this is it's often believed, especially by economists, that in Canada, housing is the economy and that it is a very protected element of our country. And you compare that to, let's say, the States, where the banks, let's say the governments, they will really protect the stock market, or definitely the banks, as we saw with the bailouts. If real estate started to tank more, I think one good example of this might be is right when COVID hit, one of the first things that was pushed down was that people could defer their mortgage payments, protecting housing. Okay, everyone don't panic, we're protecting housing. It's okay, stay in your home. If something were to happen dramatic, or we saw prices drop 20, 30, 40%, is it your belief that maybe the government would step in and somehow stimulate it, whether it was a closed door decision or not?
They would maybe stimulate it with incentives some way along the way, but I don't think a 20 or 30% pullback is enough to drive it. So when you look at, and a 20%, let's just use this as an example right now. You look at what's going on in some regions, even here in British Columbia, but look what's going on in Toronto. When you look at the peak of, let's say, 2022, prices are off 20, 30, 40% in some regions.
For sure. Yeah.
Right? Yeah. And so there's, the conversation around all of that is built around, if I bought a house in 2022 and I closed on that house and I'm now living in that house, psychologically, I'm really beat up if it goes down 20%. But did I buy it to move out of it a year later?
Of course, yeah.
You know, I can be annoyed and I can be all of those things that go along with, oh, shoot, I paid too much money. But I'll give you an example. When I moved into the Lower Mainland and I moved onto my property, you know, Stephanie, my wife, and I bought a wonderful acreage, and we literally closed on that. We went firm on the deal in December of 2000, what year was it? 2000 and, I don't remember, 16, I'm going to say.
Okay.
Somewhere in there.
Sure.
I did the deal in 2015. We took possession of it 2016.
Sounds like a peak.
Okay. like I go, that couldn't have been a better timing. From the time we bought it to the time we moved into it,
Right.
I'd had 2 cash offers for $300,000 and $450,000 more than I paid for it.
Wow.
So I go, that's awesome.
Right.
I didn't sell the house because I didn't buy it to sell it.
Yeah.
So if I'm moving into a home, so this goes back to the home buyer conversation. If I'm buying the home to live in it, it's going to go through what it's going to go through. You know, and I'll give you an example. 2022, I buy a house, I pay 1.3 for it. In 2023, 2024, it's now worth 1.1. It's worth $1 million. I go, oh crap. So I'm really emotionally beat up. But what if I buy that house in 2022? It goes up in 2023, 2024. Now it's worth 1.7. I'm going, cool. 2026, the market crashes. All of a sudden that house is worth far less. Now what's the psychology of it? Do I care?
Right.
I only care if my plan was to exit.
Yeah. Exactly. Exactly. And that's so fundamentally important, and one that I really hope people are resonating with.
It's the timing, right? It's the timing, right? So
yeah. And that's a huge element. And it's interesting because so much of everything that you're sharing here is kind of going back to just the steadfast rules of investing. You know, at the end of the day, simple things like time in the market. We're trying to time the market. Buying in an area where you're seeing above national average growth in jobs and wage growth, and ideally a pretty pro-business political environment. Any others that you'd like to share, and maybe also have any of the fundamentals shifted as the world changes?
I think there's this goes back to what I've seen over so many years of working with real estate investors. Like literally now, this many years later, it's thousands of investors, from, one-on-one, one-on-many, from stage, off stage, all the things that we've done. But we've worked very, very closely with investors. We see the psychology of it. We see all of the things that, go on in the world of investing in real estate. And the psychology of it is everything. And I say that because in 2021, 2022, we'll use that as an example. Everybody's a real estate genius.
Right. Yeah.
Okay.
Especially
everybody's making millions. It's like, oh my gosh, I bought this condo. It went up 200,000. I flipped that deal. Bingo, bango. It's all really cool. And so everybody's a genius because their neighbor, their workmate, their brother-in-law, their whoever made tens of thousands, hundreds of thousands, whatever the number is, millions. And so then everybody jumps on that bandwagon. Everybody jumps on that cycle. And then what happens at the top of a boom cycle, it always happens, the music stops. Now, if you don't have a strategy and all you're doing is riding a boom cycle and the music stops, you don't have a chair.
Right. Yeah.
And you fall down. And it hurts. I've been there. I've done that, not in the same scenario, but similar, and made those mistakes. Right now, we are in a slump cycle in most regions.
Right. Yeah.
Now, it kind of is like the Warren Buffett theory, right?
Sure.
Is, when times are tough, you've got to step up, and I don't know the exact phrase anymore about, being greedy. And the point is that when it's in the slump, this is where opportunities are existing.
Yeah, it's be greedy when everyone's being fearful.
Yes, exactly. Be greedy when everybody's being fearful. Thank you for that. And so I'm talking to investors on a regular basis who are going, Patrick, you would not believe the deal I just did, right?
Yeah.
And they get into the deal they just did. And they're going, I don't care. Like, this is, it's whatever the price was, it's significantly reduced. They're negotiating great deals.
Yeah.
They're getting to the bank, and sometimes they're having to put a little bit more money down, into more skin in the game, depending on what the financing, or who they're getting financing through. But there's lots of motivated vendors out there, which means there's lots of deals.
Yeah. The
psychology of that is tough.
Yes.
Because the headlines are screaming, it's a bubble, it's a bubble, it's a bubble.
To that point where
I was just going to bring it up too, and you just kind of made the perfect segue there, Patrick, is pulling one thing that really resonated with me from Don Campbell's book, The Real Estate Cycle, is watching the media cycle. And when you are at sort of peak bad news, everything is horrible, everything's dying, good chance we've already passed the bottom. And the same for the other side, though, right? When every headline was every house is selling for 100K over, maybe time to be a little bit careful right there. And it's amazing having gone through enough cycles focusing on real estate to see it happen every single time.
It happens every single time. It's predictable, and you can see it. And here's some of the fundamentals, which I'm sure you guys run into all the time, which is, because you both are in the industry, but you've both taken the time to educate yourselves. You understand these things. And, the challenge that most investors face is they're not taking the time to actually get the education. They're caught up in the headlines of it. They're and I'm going to say this with a little bit of risk of offending maybe some of your listeners. It's not my intention, but you both have a background as investor-focused realtors. There's a huge difference between how you look at the world of real estate and how somebody who's selling homes looks at real estate. Now, it's not that you can't have expertise in both, because you can, as I'm sure you do, but you start to understand that if you're going to look after investors, you have to speak investor. You have to be able to give guidance based on understanding what some of the economic fundamentals are that drive real estate. You have to understand the influencers. You have to be able to look at data, take the emotion out of it. And as investors, we look at the data and we break it down. Well, why do we look at the data? We want to know where real estate is going.
It's forward looking.
Not where it's been. It's good information. We don't really care. It's somewhat helpful for some reason. I don't know why. But it feels better to know where it was. But it's really irrelevant. It really is. You have to look and say, well, what's changed? Is there more people leaving? Is there more people moving in? Is all of a sudden you're in a small town and the mine or the lumber company or the whatever economic driver of that town shuts down and all of a sudden nobody's working anymore? So we look at those things and we have to consider that the realtors have to have a lot of, need to take responsibility in the guidance they're providing their clients. And so
you just nailed it on the head. It's the guidance piece. I've also always found the more I've become educated, not just the more I've read, but also the more I've participated in real estate investment, the more the difference, the kind of questions that I ask when I'm posed a question, I don't typically answer it right away. I keep asking more questions because as an investor, like you said, what's the plan? What are we trying to achieve here? It's pretty simple when somebody says, I've had another kid, I'm running out of space, I need more space. It's very straightforward sort of way of handling that situation. But when people want to do something for their children, or when they want to do something to get ahead, like we've talked about, that's a very different set of questions, and kind of going about it with maybe a professional who hasn't gone through that themselves or participated in with other professionals, I think could be a detriment because you might not look at the right things or ask the right questions or formulate the right mindset for it.
Well, there's, and that's such a great point in that investors, again, savvy investors or sophisticated investors, they're going to work with a realtor because they've worked with that realtor, or they've basically interviewed that realtor.
Yes.
So I'm an investor. Do you know anything about real estate investing? Mm-hmm. Yes, I do. Okay, so do you own some real estate? Well, I don't, but I know a lot about it.
But I read this book.
I know a lot about it. I read a couple of books, you know. And so there is a screening process. Now, but respectfully to those realtors who are great at selling homes.
Totally.
They're very sophisticated in not their ability to necessarily sell, although it's part of it, but to listen to their client to be able to accommodate the needs of that particular client.
Yes.
That's right.
When I'm looking at a piece of real estate to invest in, what do I want to know? Ultimately, aside from purchase price, what's the potential upside on rent? What's the cash flow today? What's the cash flow tomorrow? What do I got to put into it to bring it up to speed? Is there some forced appreciation I can put in it? What's the growth of that particular region? So I'm asking a totally different set of questions than a home buyer. And the realtor that I'm working with, I want to knows how to do a pro forma and do it accurately.
And it's two types of guidance. It's data-driven guidance, and then there's the emotional-driven guidance.
100%.
So for all the realtors and, of course, all the investors or would-be investors that are listening in and watching this conversation, let's talk a little bit about REIN. You're the CEO, and there's a lot of people out here that are likely saying, okay, well, I really want to invest, but after hearing this, I want to invest intelligently.
Yes.
Mm-hmm. Now, I'll share that I'm a 12-year member of REIN and obviously an advocate, but maybe share a little bit here, Patrick, on what REIN is and sort of what someone's experience would be like joining right now.
Well, so REIN's been around for 30 plus years. So again, we have been a national organization. We are a national organization that teaches people how to invest in real estate using various strategies, but understanding that it is investing, not speculating. So in other words, we're providing education. We're giving people the tools to actually use to make investment decisions. Mm-hmm. As you know, we don't sell real estate. Mm-hmm. We don't go buy a project and say, hey, we're going to teach you how to invest in real estate. And, we just happen to have this really great project that fits our model. So it really is an education-based program that goes through 16 steps. The thing about successfully investing in anything really, but in this case, real estate, is there has to be a process. Mm-hmm. There has to be a system. Something that has proven, which in this case, the real estate investing in Canada, we have one of our programs, is really driven to say, follow this step, follow this step, follow this step. Because what are we trying to do? Look into the future. Where is real estate going? But also risk mitigate. Understand how to treat our real estate investing like a business. So REIN's about providing those tools, providing the economic research, providing the contacts, the network, the community. Surround yourself with like-minded individuals who have gone before you or are facing the same challenges or actually having the same success, but ultimately is to create a financial future. We often talk about what are people really looking for? And they're looking for, it begins with, I just need some financial security. And then you start to learn to invest and you grow to having some financial certainty. And then ultimately what people really are looking for is some form of what they would refer to as financial freedom.
Yeah.
And so when you go into it with that view, with these tools, and then you put the tools to work.
You really laid that out nicely. I think a lot of people go from, I work a 9 to 5 or I'm an entrepreneur. How do I get to financial freedom? Mm-hmm. Well, hold on, you're skipping a bunch of steps there and a bunch of crucial ones.
Yeah.
Because financial freedom is the result of those things.
Well, it's part of, isn't it the shift in what's going on, even societal wise, you are at the effect of it. I find myself that way. What's our attention span these days? 6 seconds.
God, yeah.
We want the information faster, quicker, shorter. Don't put an intro on this particular video because you've already lost half the crowd.
That's right.
There's all these things that are happening, right? How do you grab somebody's, okay, just listen for a minute.
Yeah.
Right? So these are all things that we face. But, I put the metaphor is that we want instant gratification in the world, and the truth and the reality is that there is those who are investing and have a long-term view, who are pragmatic, who are systematic, have come to realize that there is no get rich quick. Yeah. Now, the problem is somebody listening to this going, well, Patrick, you're full of shit because I just watched a guy on Instagram made $100 grand.
Yeah, or my uncle.
Right? You know? So we run into these challenges. But here's the thing about it. The metaphor I often use is that you're talking about the potential of making tens of thousands, hundreds of thousands, even millions of dollars. So first off, if you're going to look for gold and diamonds and I don't know, whatever precious commodities there are out there, you have to work. You have to look. You don't go walking down the beach picking up diamonds and gold.
Yeah, they wouldn't be worth anything.
It wouldn't be worth anything. You got to blow shit up. You got to really dig, and you got to go find that. And that takes work. That takes effort. And like that, real estate is the same. You've got to go through the process of learning and discovering and finding the right deals and having the right people on your team to really grow a portfolio that pays you well into the future.
Yeah.
And that's a critical component of it. And a lot of it is just a shift of our views of the world, realizing that real estate isn't about instant gratification.
It's so true. And yeah, you obviously bring so much wealth and so much information. We really appreciate you being here today. You have a lot of other interests outside of real estate as well, and a lot to share. So for the listeners here today that want to learn more about you, can you share some of the other avenues that you help people where they can hear you, your podcast?
Well, yeah, I've hosted the podcast, The Everyday Millionaire, now for 8 years. My wife and I added a segment to that, and that's certainly because of what we've done for many, many years, and it's called Mindset Matters. You know, when I look at REIN as an organization, literally thousands now. I think there's about 200,000 people have been through our program. Individuals have been through our programs in learning and the education part of it. You know, sometimes you look at it, it's a system, it's a process. We tweak it and we do things, but it's still pretty much the same this many years later. We follow this system, follow this process. And I'm looking at it and I'm going, gosh, there's members of this community that just crush it. Like, have built massive wealth investing in real estate. Yeah. But then I run into and see people all the time that go, I just couldn't, it's been a couple of years. I just couldn't get my first door. And I'm going, what's the difference? Like, we're receiving the same information, the same education. We're providing the same service. What is the fundamental difference? And ultimately it breaks down to, I don't want to minimize it, but I talk about mindset, but the understanding that there's a dynamic that people just said, tell me how, tell me what to do. We do that. We can do that. But they still don't take action. They still don't go on to create that financial future for themselves. And that's a mental game. That's a understanding self game. We get in our own way. And so when on my podcast, the Mindset Matters that I do with my wife, Stephanie, she's a world and Olympic class mental performance coach, and myself just with 40 years in business, we really look at that aspect of our own personal and professional development and understanding who we are. So there's a fundamental, and I'll go off on a quick tangent around this, is that we've all heard the quote, it's not about the goal. It's about who you have to become to achieve the goal. Well, intellectually, we get that. Like, we get that. Sure. But if you listen to that quote, it means a little bit reactive. So it's, in other words, who will I be when I get there? Well, what if you make the decision today?
To design who that's going to be.
I'm that guy. So who do I have to be to build a multi-million-dollar portfolio or $1 million portfolio? Who do I have to be to buy my first piece of real estate? That's a decision that you make in the moment. So I want to be an outstanding realtor. Well, I don't know how to be I know that's what I want to be. Well, you can't wait to get there. You make that decision today. So I may look to you guys and go, okay, I see you as successful. I look at all of the character traits that you have and how you show up and the things that you're kind of doing. And I'm going, oh, I can do that. I can be that. I can be that today. I can start on that journey today, being open-minded, looking at my own personal professional development. I can be committed to learning and growing personally, and as well as the tactics. You follow? So back to your original question, that's kind of where the space that I play in. We do things, we've got a program coming up in March 1, 2, and 3 in Calgary, which we call a think tank. It's a very small group, like 15 people. It's a weekend where we lock down and we go through the process of, my theme for 2024 within my own businesses, and my wife Stephanie and I, we have a theme, and it's clarity equals velocity. And this is where I see people getting in their own way. Ask them what they want. They go, I don't know. Well, where are you going? I'm not sure. So clarity equals velocity is only to say this, is that when we have a vision, when we get clear in our relationships, when we get clear in our partnerships, when we get clear with our teams, whether that be because you own a business or you're an entrepreneur and you've got some leadership, when we get clear, we know what we're working backwards from, then we just make decisions. People have trouble making decisions, and it's often because they lack the clarity of what they're working backwards from.
Do you think it's a fear?
It's always fear. There's really only two things, fear and love.
Yeah.
And we're only making decisions based on those two emotions, ultimately. And without going down that rabbit hole, there's a lot of fear. And it's a lot of fear that's based on, that's why they have, future events already realized, and, the acronym, and forget everything and run. And, there's all these fun things around the, fear.
Yeah.
And yeah, of course it's fear. Of course it's fear. And it means that how do we create the courage to move forward? Well, it's a mental game. It really is.
And you've touched on it, I think, throughout a lot of this podcast. When you look at data-driven decisions, you remove the fear. And I think that that's a big part of people are afraid to walk around at night because they don't know where their next step's going to put them. But if you took a flashlight with you, that fear goes away.
Sure.
The same could be said within real estate investment space. If you understand what your next step is supposed to be and you've illuminated that step, chances are you're not going to be that afraid to take it.
Well, there's always, fear is there to protect us. But when you start to pay attention to what the fear is and you break it down, you don't necessarily have to buy into it. So there's a phrase that I often use, a quote that I don't know whose it is. I use it. I can't give anybody credit because I've never been able to find where it came from. But ultimately it is confidence is rarely owned. It's almost always borrowed. And so we borrow confidence in the case of real estate by surrounding ourselves with the right people. Yeah. And when we start to do that, if I don't know what's going on in the Vancouver market specifically, I'll use that as an example. And I just know that I see some real good data that supports a thesis around Vancouver, but I'm not quite sure where in Vancouver, and what is the property that's most in demand, and where do I got to look? What do I do? I'm going to phone you guys. I'm going to go, guys, give me some insights into what's going on. Well, then you come at me with, dude, this is what's going on. This is why it's happening. This is, all the things that are happening with LRT and, roadways and all of the things that are happening. Okay. Well, all of a sudden my confidence does what? It goes up.
Right.
Yeah. Okay. Now you may say, I don't even know why you're looking at that neighborhood. Bad news. Okay. Yeah. I go, cool. Now I have confidence that I'm making the right decision to get out of that neighborhood.
Either way, your confidence goes up.
100%. So first acknowledge that, I'm a little bit afraid and it takes some courage. So what do I need to do to gain the confidence? Well, I have to hear from somebody. I have to put the right people on my team. I have to have the conversations. I maybe need to develop a skill. But there's no need to let the fear stop you. Many have gone before you.
It's very good advice.
That's great. Yeah. Patrick, this has been incredible. I know I got immense value from this. I can tell by Ryan's demeanor, he did too. We are going to include every link to track down people that want to find more from you, from REIN, from your podcast, coaching, everything. But ultimately, thank you so much for being here today. This was immensely fantastic.
It's been fun. Thanks, guys.
Yeah, thanks so much.